Hey guys, welcome back to Stock Tricks with Nick. The past 2 weeks in the market have been incredibly volatile. So let's take this week's recap day by day. Look at that V bottom. And the market closed near the high of the day. Largest point gain in Dow history. What can make this day any better? And Robinhooders couldn't even participate in it? This is amazing. I'm going all in here. I told you that rally was just a bull trap. The Fed even knocked off 0.5% on interest, and the market took that as a sign of weakness. Stocks are about to drop through the floor, so I'm going to go 100% short here. I do say, it was a Super Tuesday indeed. It turns out Bernie was more contagious to the market than that virus was. Now with the presidential race between Biden and Trump, our stocks can go back to racing to all-time highs. I'm going 100% long here. This is going to rebound quickly. I knew Wednesday was just a one-day rally so the big players could get their money out. The stock market didn't even make a new high compared to Tuesday, and that's before the Fed lowered rates and Biden's stock soared. The market's cooked here. I'm going 100% short. See, the market's already made new lows and stocks are continuing to fall. The beginning of the week was just a bull trap. I'm adding to my short positions here now that the bear market's been confirmed. No! So with all this back and forth in the market, how did my account fare? Finally, after 5 weeks of losing, we have a winner. And not just a winner, my largest week ever. I'm up nearly $630 by playing long positions at the beginning of the week and closing it out with some puts. The thing I did best this week was stick to my game plan. I took profits or reduced risk when the opportunities came. And when I started a position, I started with a very small size, so I wouldn't be emotional while trading. After my big losing week, I've made these rules for myself, and I've been diligent about keeping them. And even though the last 3 weeks were losers, I was still following my rules, and each week I was losing less and less. This week I executed the same strategies, but the market went in my favor, and I came out with large gains. So now the challenge for me is to not let winning cloud my judgment. I need to go into next week and just execute the same strategy like last week didn't even happen. Find quality setups, start with small position size, scale into my winners, and cut my losses quickly. The most important thing you could do in a volatile market is protect your capital, because you need money to make money. And holding on to capital while the market's dropping just gives you increased buying power for when we do find a bottom. Let's take a look at 3 positions that I'm holding over the weekend using the E-Trade platform. The first stock I wanted to talk about was LYFT. On Wednesday, the stock had popped up nearly 9%. And at this point, I entered a put position with a strike of $136. I went short even though the stock looked to be rising because my company issued a company-wide travel ban for our employees. So I figured that the market wasn't done with this virus. And wouldn't you know it, the next day, it dropped even lower than the start of Wednesday. So at this point, to limit some of my risk, I sold 130 strike puts. So this offset how much I could lose in the position, but it also limited my gain. So with a put spread of a 130 and 136, the most I can make is $600 times the 4 positions, so $2,400. But the amount that I could lose now is only $196. That's a good risk-reward play. The next trade I wanted to talk about was BYND Meat. What brought me to this trade was that the stock was rebounding so well off the lows, but again, I wasn't sure that the virus was done. So with these short-term moves, I really look at this 8-day exponential moving average. And if you look closely, you'll see it went up to test that and got rejected. So I got in on Thursday with these puts. Because BYND Meat is known as a volatile stock, the options are very expensive. And with a somewhat smaller account, I didn't want to risk too much money. So I went with a put spread here by buying an 85 strike put and selling a 75 strike put. So I would make money if the stock was below $85 by expiration. And any amount below $75 doesn't matter because my profits are capped at $1,000. 85 minus 75 is $10 times 100 shares per contract. So it cost me $201 to hopefully get a value of $1,000 or an $800 profit. So this is a 4-to-1 risk reward play. And finally, we have my GE trade. And if you've watched my previous videos, you probably know what I'm going to say already. There's this gap from November that has yet to be filled. So on Thursday, when the stock moved lower and closed below the 200-day simple moving average, I wanted to go short. I bought 5 puts with an $11 strike. On Friday, we gapped down and almost closed this gap entirely. I think the low today was 916 and the high from the day before the gap is 914. So we had 2 cents. So basically a filled gap here. On Friday, to reduce risk, I sold 2 of the puts. So now I only have 3 left. I've locked in some profit, and I'm letting my winners run here. Thanks for tuning in to Stock Tricks with Nick. It's been a wild week in the market, but you're even more wild if you think you know where it's headed next. Find your quality setups, start with small position sizes, and lock in profits when you can get them. If you enjoyed this video, please like and subscribe to the channel, where I make weekly recaps like this or personal finance videos. Let's keep this flag flying for another week.